Alright, so this video will be the last piece actually I left in my class lecture. So I'm going to go through the idea of the FIFO and also finish the calculation that you need to complete the question. So the principle here is the beginning WIP and the new production will be treated differently, because the idea of the FIFO is it will guarantee that first in first out. So whatever left from the previous production season will be taken care first. So the beginning WIP cost will be transferred out directly with those units left from the previous season. Okay, and the equivalent units, okay, will not be blended. It will basically consider only a few things. The remaining degree of the completion from WIP instead of all the stuff, and the units completed and transferred during the current production, and whatever ending WIP in this period for the future completion. And the cost and each cost category will be partially blended. Okay, so basically only the new incurred cost. So I would be very careful. Let me remove this blended because I think that might be misleading. Okay, so the cost and each cost category will be similarly the whatever cost to account for divided by the total equivalent units. So this is the whole idea of the FIFO. So I'm going to go through the calculations to make sure that you do understand all these technical details. So let me pull out the Excel file. Then I'm going to work on these questions. Okay. So this is what I have right now, and we are going to go through the step 1. Okay, so let me actually make them relatively bigger here. So the step 1, we try to figure out the physical units. Okay, and step 2, meanwhile, we're going to figure out the equivalent units. So once again, we have two different costs. One is DM, one is conversion. Okay, so these are the same. Okay, and the next, I'm going to take a look at how many you have in the beginning inventory. Okay, WIP beginning inventory. So I think we have how many? 225, I guess. Then you have new production, right? And we have 275. So total we're looking at 500 units. Okay, 500 units. I believe that we are going to manufacture. We are going to complete and transfer 400, and eventually we have 100 left in the working process. So get back here. The FIFO will have to separate those 500 units or group these 500 units into three categories or three subgroups. The first one is a WIP beginning inventory. So they're about 25. So so basically the question is, I'm going to first take care of the 225 units left in the WIP. I'm going to complete them and make sure that they will be completed first and eventually transferred. Then I'm going to have some units that I have to complete and transferred during the current season. This is your new production. So among the 275 new production, I have to find out how many will be completed and transferred this time, how many will be left. So it's pretty easy to find these numbers, because we know that the 275, we have 100 units that will be left in the ending inventory, and for the beginning we have basically 175 complete and transferred. So therefore we're looking at a 225, 175, and a 100. If you still remember weighted average, let me put a FIFO here. Weighted average, we are actually looking at 400 units and 100 units respectively. So this is a big difference here. Okay, and also let me make this column a little bit bigger, because I want to put some information there before we continue. So I want to tell you that, do you still remember the percentage of completion? So here we're looking at 100% for the DM and 60% for the conversion. And for the second group, we're looking at 100% each. Okay, I think that's what we have here. Then for the any inventory, we're looking at the 100% for the direct materials and 50% for the any inventory. So now we're going to find the number of equivalent units. Okay, so for the 225 units, okay, we believe that the degree of completion for DM is going to be 100%. So therefore, the remaining you have to work on is going to be 0. Okay, because it's basically 225 multiplied by 100% minus 100%. The first 100% basically tells you the completion. The next 100% that you try to minus is the percentage of completion you have for this particular cost. So for the conversion is going to be 225 multiplied by the remaining completion, which is 100% minus 60%. Okay, so therefore you get 90 units. Okay, 90 units. Then let's take a look at the second group, completed and transferred. So it's fresh production and 175 are completed and transferred. So in that case, you are going to consider 175 units. They are equivalent units as well. So for the any inventory, how much efforts you have to use in order to complete whatever units you have left. So in this case, we're looking at 100 multiplied by 100% all the time. And for the WIP any inventory for conversion, we're looking at 100% times 50%. Okay, so these numbers tell you the following. So I'm going to completely forget about the beginning inventory, the completion part. Okay, there's some unfinished part. That's my focus. So in terms of DM, I don't have to invest anything out of my the current costs added. For the conversion, I only need to finish 90 equivalent units. Okay, then for the new production 175, I'm going to devote finish everything 100% from 0 to 100%. For the any inventory DM, I definitely have to consider 100% of these units. But for the conversion, I only need to take care of 50 units, which is 50% of 100. Okay, so therefore now, in terms of the numbers of equivalent units, I can just add these numbers together. Okay, and it's the same here. Okay, so we're looking at the 275 and the 315. Okay, so these are the numbers of the equivalent units and each cost that I have to be careful with, that I'm going to use. And for other numbers, I'm not going to consider. Okay, so step 3, we'll talk about the cost summary. And for this part, we are going to take a look at the WIP beginning inventory. Okay, so what you have is these costs are here. Okay, I'm going to go to find this cost. Okay, it's same question, so I'm going to go very beginning, 18,000 and 8,100. And also, oh sorry, I should bring them down here. Then the next will be the new production. Okay, the new cost added. Okay, and this will be these two numbers, 19,800 and 16,380. So that's what you have here. That's what you have here. Okay. So what's happening next is what you need to do is you are going to So I want to basically highlight these two numbers because the FIFO method will focus on the cost to account for and the number of equivalent units actually to consider. So basically you're going to use these numbers. I'm going to highlight these numbers. You're going to use these numbers, okay, to find the unit cost in step 4, okay, because the FIFO method will forget about what has been completed and what has been invested, focus on the current production. So that's the FIFO method, okay, because the assumption is we assume that all the previous production will be taken care of first, so all these costs, all these units will be transferred out. So now it's time to focus on the current. So for the step 4, we're going to find the unit cost. It's going to be, you can divide the cost added during the current period by the number of equivalent units, okay. Alright, so you end up with the 72 and 52. So that's what we have here. That's what we have here, okay. So once you have the unit cost, the step 5 will be the assignment of these costs. So namely, how I'm going to split these two costs, and a part of them will join the 18,000, part of them will join 8,100, so that I'm going to post the correct debit and credit or debit to these accounts, and what I need to report in my ending inventory. So in this case, we better actually go with the 3 groups, okay. The WIP beginning inventory, okay, so this will be 18,000, we know that, and 8,100. And also I'm going to put the WIP additional because you have to invest extra money to complete incomplete unfinished units, right? We know that. Then next will be completed, okay, the new production. The finally we're looking at WIP ending inventory. So it's a little bit more complicated than a weighted average method as expected because of the complication in the FIFO. So to make everything easy, I'm going to copy down these numbers, okay, the equivalent units, because we do need all of them to do the cost assignment. I'm going to copy down them here. So for the WIP additional, okay, that I'm looking at basically this row. So I don't have to invest anything on the direct materials, but I do have to invest on these 90 equivalent units in those in the conversion cost. So what I'm going to do is I will multiply the $52 by the 90 units, which is down here. Then that will tell me, okay, I have to use $4,680 out of this $16,380 to complete the WIP. For this one, I know that is going to be 0, right? So I'm not gonna. Or you can do the multiplication, which is 0 equivalent units multiplied by 72, which is 0 again. For the completed, I'm looking at 175. Okay, from the 0 to 100% completion. So this one is a lot of easy. I'm going to just multiply 175 by 72, and for the conversion cost, I'm going to multiply 52 by 175. So I get this number. Okay. So for the WIP and inventory is going to be similar. So I multiply 72 by 100. Okay. Then I multiply 52 by 50, so I get this number. So now you are going to add all these numbers together, okay, so which is I'm going to put the following, okay, I'm going to add all these 6 numbers together, and the next I'm going to add this number to that, okay. So now I have 2 numbers here. Okay, so this is a final number, 52,480, and this will be the 400 units that completed and transferred. They carry $52,480. Okay, the value, and you may know that these 400 units will include 225 the leftover units from the previous production, and 175 new production. Okay, and the rest of 9,800 were basically the cost carried by the remaining 100 units, and they are the part of the new production. So keep one thing in mind. This will let me come here a little bit. So let me highlight. This will go to your balance sheet, and this basically will go to your finished goods, right? Okay, something like that. Okay, so this is go to your balance sheet. Okay, so because we know that WIP any inventory is a part of an asset, so that will go to a balance sheet. So that's how we finished the FIFO part. Alright, so I feel free to review these slides. I think here basically what we did is these two slides, so you might want to review these slides and feel free to ask me any questions. Now I'm going to do the next two finish the next two slides. Sorry, actually the last slide right here. Now I'm done. So first of all, you might want to read by yourself from the page, these two pages. So why we want to compare these two measures, and also which one we should use. So weighted average is less detailed. If you want a detailed operations, I think FIFO is a lot better, because you're gonna keep track of the first in, first out, last in, last out, all these units, right? So basically, if you want a detailed operations and you want to price every product correctly, the FIFO method is highly recommended. And also the weighted average and the FIFO methods, they will affect pricing decisions, product mix decisions separately, very differently. So you can use either one of them to help you make the correct decision. So with FIFO method is absolutely more accurate and detailed cost analysis. Okay, so definitely is highly recommended. Now once we come to the taxation, okay, it's very tricky. Because many times you have to report high net income in order to earn the compensation. So a lot of executives and managers, they sometimes do manipulate these things using either weighted average or FIFO method. So either way, so it's up to you sometimes to think about which method should be applied. Okay, and next is because of their effects on those goods costs. So therefore, the CGS actually is going to be severely affected. That will actually give you net income issues. Okay, so you can imagine that if the prices are rising, so the first thing, if the prices, the direct materials, the costs are rising, okay, all the time, then what will happen is the first in, first out will basically will be it's the first in, first out will give you larger, will give you because the first in, first out will give larger inventory, which is less CGS. Because of less CGS, it will report higher net income. If you want to avoid a tax, then you might want to go with the weighted average when the costs are rising, because the weighted average will report less net income, will defer taxation. So from taxation perspective, this is something definitely you can consider. Alright, so I think this is about the left FIFO that we couldn't touch in the class lecture. I hope you will understand the FIFO method better and know how to compare weighted average and the FIFO methods. Alright, that's it. Have a nice day.